Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello, and welcome back to the podcast. Thank you very much for being here. Thank you if you are a first-time listener. I appreciate you. Hope you enjoy the other several hundred podcasts we have. If you are not listening to the Without the Bank podcast, go over there and listen as well, because there is good stuff over there too. Okay, we are going to talk about more myths today about life insurance and about infinite banking and all this stuff. I have done 2 of these already, 1 through 10. Today, we are going to do 11 through 15. I feel like I could just do these forever. But today, 11 through 15. Number 11 is interest cannot be deducted when using it for a business expense. Now, this is truly an accountant's call, really. My accountant says it is 100% fine to be deducting any interest on my loans as a business expense, as long as I have the receipts to prove that that is what I use the money for. And so if you are keeping bad records, I can see how that could be a problem. I have also been in contact with some accountants who just are so absolutely scared of an audit that they will not let you deduct anything, which is absolutely ridiculous in my opinion. My accountant was an IRS auditor for 30 years. He does not see a problem with it. He said if he were to be doing the audit, it would stand up in an audit for him. And so definitely make sure that you're talking to your accountant. But again, I have had several accountants say it's not a problem. There is the answer to that question. Number 12. You paid all your debt off, you're debt-free. So this is what we hear a lot. When I use the infinite banking concept, I was debt-free in 2 years. I was debt-free in 5 years. Whatever that is such a bunch of BS, because you're not debt-free. What these people are saying is I've paid off all of my lenders, the banks, the student loans, the credit card companies, they're paid off. But what they're not telling you is they borrowed cash value to pay those people off. So all we did was move the loan to cash value, which is great because now we can control it. But we're not debt-free. We still have debt because we still have a loan in the policy. And so a lot of people in this industry should get some cease and desist letters, okay? Because they are not telling the truth about, they're making infinite banking sounds so much better than it is, and it's already good. But you're not debt-free until you have everything paid off. Just because your death benefit is collateral to the cash value loan does not make it debt-free. It's debt. Okay? So when people are saying, oh, I was debt-free, okay, but how much money did we owe the policy? Yes, we control it. That is not a 100% accurate statement. And yes, it makes me mad. Number 13, if you 1035 money from one policy to another, there's no cost to that. So what that means is if you 1031 property, you can sell land and 1031 it and avoid some tax. You can do the same thing if you have one life insurance policy and you want to move it to another one. That's called a 1035 exchange. There is no tax implication to do that. There are agents out there that will do 1035 all day long. They'll do a 1035 on a whole life policy to another whole life policy. So if you're doing a 1035 from one whole life to another whole life, they think it's fantastic. They tell you you're not losing anything, which is absolute lies. Even if I were to 1035 something from a universal life policy to a whole life policy, because let's say we're like, hey, we don't like this universal life policy. There's a lot of fees and charges and blah, 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 blah. And so when you 1035, you are coming into a new policy and you're buying death benefit at a new age. There's a cost to that because we're buying death benefit again with that money. And yes, we do 1035s rarely, but we do them here if it's coming from a policy that's really bad. I will never, ever 1035 a policy from another whole life company to my whole life company. That is called churning, and it is not illegal, but it is definitely frowned upon in this industry. It is unethical, in my opinion. Now, you have agents who will, and there is one that is in this town with me, that when he moves from one company to another, he will 1035 whole life to the new company so he can make more commission. That's called churning. It is absolutely unethical. There is no reason for it because your insured is still losing something. Now, I have heard that clients will catch on to this. If they're really smart and they understand, well, how much money am I losing? What am I losing long term? Why would I 1035 a good policy to another good policy? Does not make sense at all. Okay, number 14, you can only use cash value for cash flowing assets. That also is a huge misconception. You can use your cash value for whatever you want to use it for. If you want to use it to go on vacation, if you want to use it to buy a car, if you want to use it to put braces on the kids, you can use that for whatever it is you want to use it for, okay? But ideally, we want to use it for a cash flowing asset because then that asset can pay the loan back. Now, if you were going to pay cash for a car versus borrow it from the policy and you can afford the payment back, then go do that. You have access to your cash value for whatever it is you want to use it for. 100% yours. Number 15, life insurance companies are banks. Oh my goodness gracious. No, they are not. And I say this a lot in my podcasts. The life insurance company is a life insurance company. They are there to provide death benefit for you. They are not there to take over your banking function of your life. They are not going to run amortization schedules. They are not going to send out interest statements. They are not there as a bank. We are using them that way. But do not set these high expectations that you're going to be able to see everything online and they're getting better. But they're doing that because of infinite banking. People prior didn't need all of this information and require all of this stuff. So think about this. You're taking this huge 200-year-old elephant and you're trying to pivot them, and they're not going to pivot quickly. It's going to take them a long time. So if you are wanting everything instantly, if you are wanting them to babysit you like the bank does, that's not happening. Remember, this is you becoming your own banker. This is not now the life insurance becoming your babysitter. This is not Mary Jo's office becoming your babysitter. We are here to help you, but we are not going to babysit if you're paying a loan back, how you're paying the loan back. We're just going to help answer those questions and say, oh, you need a form filled out? We're happy to do that. But at the end of the day, we've given up so much control to the banks that now we think we should give this control up to the life insurance company. We think somebody else should do all of our stuff for us, when in fact, that is what's gotten our society in trouble in the first place, is that we've allowed everybody else to manage our finances. And we're like, yep, we're just going to wipe our hands of that. We don't need to hassle with all that junk. Yes, we do want to hassle with it. It's our money. We want to make sure that we know what we're doing with it. Okay, that is 11 through 15. So I have more. I'll be back with more. Let me know if you have comments, questions, concerns. If you are hearing something that you have a question on, I want to know what that is. There's no possible way, you guys. I have answered every single question. So keep letting me know if you have things that you want me to talk about, because I'd be happy to talk about them. All right. You have a fantastic rest of your day, and we'll see you in the next podcast.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.